Yeah, hello and good afternoon. I welcome you to today's special webinar here, NFPs ahead, which scenarios to expect exclusively for JFD brokers. My name is Jens Klatt. I'm their global head of research and education. And yeah, so we want to have a look at different scenarios and also what to expect respectively. I have to admit that I somehow doubt that tomorrow's NFPs will be a market mover yeah, like the NFPs are usually market movers here. This has several reasons. Probably it makes also sense to not just look at the NFPs itself, could really be a non-event here, but instead probably also look at what to expect right now here from the ECB, respectively, how to interpret the words from Mario Draghi here he's giving. So in fact, it's one of those special days, in fact, where the NFPs tomorrow are not published on the first Friday of the month as usual, but are published on the second, and it's not that often that you in fact have the Thursday then with the ECB here and the NFPs the next day. And yeah, probably we should definitely use this, and somehow I'm a little thankful, to be honest, because as I already said, I don't really expect the non-farm payrolls to be such a huge market mover, and I will give some reasons why I don't see that. Nevertheless, that doesn't necessarily mean that we don't get to see huge volatility. And by the way, there's also some chance that there's some volatility ahead, especially in the DAX. There we go. That's a very interesting break now, in fact. So it's something like probably 5 minutes ago that this is something I got you through regarding the NFPs a little later on, but it wasn't in English, but it was a German tweet, and I just show it to you here. So if you want to follow me on Twitter, by the way, it's not only German, but there's it's 50-50. It's English 50% of the time, and it's 50% of the time it's German. And what you can see here is a German quote which says, if the DAX short term breaks 12,230, we have a very good chance to see another attack at 12,270, 300 here on the upside. And in fact, we just broke this level, and now the DAX is taking off. Just to give you also an idea why this is relevant for me. So in fact, I'm currently long the DAX. So probably some of you might have listened to this event for quite a while. I'm also managing clients' money here, and so we did some small changes to the overall structure of the managed account I'm trading. So in fact, for me, nothing changed at all, but nevertheless, we added some further strategies here, which is now showing that I'm not only trading the DAX, which is my main traded asset, but we are also trading lots of other markets, mainly currency markets, but also the S&P, for example. I'll, by the way, guide you through the market opening and present the strategy. We are also trading here within this basket. So it's one strategy. It's not only one. I think it's something like 8 to 10. I haven't, in fact, counted them. And so in the morning, I decided to take a long position in the DAX. Usually a system trade generated a short position, even though my position here, based on the overall risk I'm taking, outweighs this short position here. And that means that I'm all in my account currently net long the DAX here. Again, now some might say, hey, does that make sense? I mean, if one strategy is the DAX short and going along in another strategy, yes, in fact, that makes sense, because in the long run, it's not sad that both strategies will turn out a profit, because the expected value of each strategy we are running here is in fact positive. And then so it's not sad that if you're right now long the DAX and short the DAX, which may be counterintuitive somehow, that this doesn't make sense, but in fact it makes a lot of sense, because the strategies we are trading here are completely different from each other and have completely different exit logics, for example, and all this. And my strategy I'm trading and my approach here is not purely quantitative, but it's more a discretionary approach, even though system-based discretionary approach. So I have a system which generates the signals for me, but I'm managing the stops here then on an intraday level, and try to increase the overall known positive expected value of my strategy. And so in fact, today I completely overruled the system. So usually my system would have generated a short position in the DAX, but I took the long side. And right now it seems as if it plays out. So again, it's no big surprise now that after breaking 230 here, that we are now heading towards the daily highs. But the interesting thing is now, first of all, what's the reason for that? And second, why is this level in fact interesting? So, I mean, the current driver is obviously Mario Draghi, with his comments on the euro, which is obviously more dovish interpreted than the initial reaction showed. So in fact, let's go back to the 5-minute chart first of all. So here you can see that that was at 1:45, respectively 12:45 p.m. GMT here. That was a bearish reaction. And in fact, we saw some selling pressure after the gains from yesterday, especially. So very strong reaction here on the resignation of Gary Cohn when the market dropped sharply overnight. We opened with the sharp gap lower and the true gap lower, and then reversed not just only most of these losses, but pushed in fact higher and attacked the highs here of the day before. So from Tuesday in this case. And so that was already something really interesting. And to me, especially in a market environment, and by the way, trade war will be something which will also be a topic in terms of the NFPs tomorrow, and why the NFPs are probably not that interesting, but it's more like it's interesting to watch here the discussions, respectively, the fears around potential trade war, tariffs in the US and everything. And that's, by the way, also something which somehow is interesting in terms of the ECB. So, but let's first thing, let's make it that way. So let's have a chronological way here and not jump from one topic to another. I think that doesn't make sense because it's a little too complex, in fact, and it definitely makes sense to probably have a certain structure to it. So first of all, I think that yesterday's reaction was very strong after the resignation from Gary Cohn. And so what we've seen then was a strong reversal. In fact, it was a great day. So yesterday we had a nice profit. We turned something like 0.7% or something like that. So to some of you that doesn't seem that much, but in fact it's a lot, because the risk we took here, we're taking in the overall basket per day, is less than 1%. So if you're making 1 R and more than that on a intraday basis, that's really good. And it's in case of this account here, even though it's a conservative approach, all in all, the overall tendency is clearly upward. And what we try to achieve is to generate a positive return for our clients here, but with a less than 10% drawdown. And that's only achievable if you reduce the risk significantly. And if you have then such strong trending markets, most of these strategies really turn out to be really good and perform really well in such market environments. And so yesterday was a quite strong day here. And now the thing is that if you look at this, the resignation of Gary Cohn, what does it tell us? Well, it somehow tells us that Donald Trump is probably really serious about getting such tariffs going here, and probably is willing to enter even a trade war and really put America first, as he all the time emphasizes it. And with this in mind, the resignation of Gary Cohn here, he was the economic advisor to the White House, and someone who's also well known to the financial world here as a former president, I think, at Goldman Sachs. And he was also considered to be the successor here of Janet Yellen as the Fed chairman. But you could clearly see over the last months and over the last year, and since the election of Donald Trump in November 12th, 2016, that the longer their relationship went, the more you could feel that Gary Hall really is not real friend of Donald Trump and his policies here. And especially in terms of tariffs, since Gary Cohn is known to be a neoliberalist and someone who is who's pro-globalization and against protectionism, and tariffs are one of the purest forms of protectionism in general. And so with his resignation, and this is one of the main reasons why the market took such a sharp drop here on the downside, it becomes somehow more likely that Trump will bring up such tariffs here. And now the interesting thing about this is, I think, that the market recovered that strongly, because usually this is something where you expect the markets to keep on dropping, as we did last week on Thursday when this was initially mentioned with those tariffs here, and the market, in this case the DAX, then accelerated its trend here on the downside. And at the beginning of the week here, for example, dropped sharply below 11,900 points, but made back most of those losses already on Monday, and kept on recovering, and again kept on recovering here even after the resignation of Cohen, making it more likely that those tariffs will be implemented here, and which has potentially negative impacts on the economy worldwide, by the way. And that the market can recover this is a very, very strong sign. The only question probably which arises, even though it probably doesn't make sense to look at it from this perspective, but to me, as an analyst, it's not only that I'm trading the market, but it's also that I'm really interested in why is something happening. Also to have a feeling and let this feeling, and in combination with experience, influence my trading decisions. Then probably to trade a little more aggressive, not only risking, let's say, 0.2, 0.3%. But 0.5%, and get a little more aggressive then, and try to squeeze somehow some more performance out of the market without risking enormously an enormous amount of money here. That's usually what trading comes down to. And now the thing is that I interpreted this move here not just to be a strong sign, based on the price action and based on the fact that in such an environment, you usually expect markets to drop, instead they rise. This is a sign of strength, but it's also potentially a sign that markets are expecting a more dovish stance from the ECB here in their statement. In fact, they came out with something really hawkish, in fact. Well, it wasn't that surprising, let's say, but the thing is that first of all, they left rates unchanged here, so no big change at this point, but they dropped the explicit pledge to increase size of QE if needed. So even though here it's sad that it's not unexpected, though, nevertheless, it's more hawkish, I think. And it's showing that the chances of an extension of quantitative easing of the asset purchase program beyond September 2018 is not that high. So it's not very, very surprising to see the DAX not perform really well on this fact. And also, it's not really surprising to see the euro here. It's a 4-hour chart. Let's move on to, or let's go back down to the 50-minute chart here. So that it's 12:45 p.m. to see the euro react bullish and push from 123.70, 80, something like that, significantly above 124. So that's, first of all, it's a reaction which you would expect, but, and this is the interesting thing, now the market is giving back all these gains. So to be honest, I really have no idea why the market is currently doing what he's doing. So giving back these gains here, respectively, I'm seeing the DAX then here now pushing towards this quite strong, by the way, it's a very important region. You can see that here, 270, 300. If we make it above that level, that's the current high here from Tuesday. It's also a relative high from last week, the 1st of March, so last week on Thursday, from which we then took another hit on the downside. So if we make it above that level, I think this is a strong signal, and we can easily count probably that the DAX here, by the way, also very, very interesting to see that this was a former support. So some of you might recall that over the last weeks here, I said that if we drop below 270-300, this is a bearish sign. And in fact, it was. Last week, we dropped below this level and accelerated quite aggressively last week on Thursday. So a former support became a new resistance. And now probably the DAX makes it back above that level. And if this really happens, there's further room on the upside, which could push us minimum to 12,400 points, if not into the weekly close, up to 12,600 points. So you can also see this here on the hourly chart. If we make it above this dotted line, the red dotted line, there's definitely room on the upside, and that's one of the key reasons why I wanted to be long. So I wasn't stopped out here. And in fact, the position is not really huge. So which I definitely like to see. And now let's just see whether we can make it above that level or not. If we make it above that, that's exactly my motivation in the morning, even though I really like to see the DAX pushing straight away above 270-300 instead of pushing down towards 200 and then taking off from there. But okay, well, now it's getting really interesting here. If the market can make it above that level, if so, well, there's definitely further room on the upside. And shorts, if you're currently on the short side, well, probably it's at least a good point to cover part of those shorts if the market can really push above that level. Even though some of you or all of you, please keep in mind that I, as someone who is positioned on the long side, surely doesn't see the market dropping sharply from here, but instead shooting higher. So I'm definitely biased, but I think so far the reaction is very strong, and it seems, again, let's just have a look here. It seems really as if the interpretation of the market, of the comments from Draghi here, is for whatever reason is now interpreted as dovish. So let me just see here. What do we see here? 9 minutes. Yeah, protectionism concerns. It could be something, which is interesting. So let's just click on this article. By the way, Zero Hedge is a very good source here to get an overview and also a summary of the comments. DAX now 12,300. So Draghi, if you put tariffs on allies, who are your enemies? It's a very interesting question here. So again, Mario Draghi is the president of the European Central Bank, and you expect him to be quite neutral. So it's very neutral. It's a very objective. Nevertheless, it's something to really, it concerns the ECB, and probably one of the reasons why the DAX is now taking off is based on what I already presented over the last days in the morning meetings, when I said that I would expect to, I think revenge is a hard word, but somehow expect the ECB to probably come out more dovish and use the current developments, especially around the inflation rate in the Eurozone. By the way, let me just give you a chart here, something I haven't prepared, in fact. But so you may recall what happened here. Again, here, ECB removes easing bias from statement. So it's definitely something to see, and it's something you should consider to be bearish, but something, hawkish, but nevertheless, something which is completely overruled now from the market, and the market is reacting completely counterintuitive, let's say. So the market's moving up since you usually expect it to go down. Now, let's have a look here at the inflation rate in the Eurozone. So what we've seen is that the Eurozone inflation dropped here within the last 12 months. So we started in June, July at around 1.3%, pushed higher to 1.5%, and now we're trading below this level. Why is this worth to mention? Well, look at the developments in the energy sector here. Look at what happened within the last 9 to 10 months in crude oil prices. WTI here, we pushed higher over 50%. So usually expect inflation to pick up significantly based on such a development in energy prices. If this doesn't happen, well, something's going wrong here in the Eurozone. So probably one of the reasons why inflation can't pick up has also to do with the fact that since last year, the euro picked up serious momentum, especially after the election of Emmanuel Macron here in Paris, respectively in France, Paris, yes. So in May, and we traded sharply higher. And by the way, here, when we traded against those yearly highs, the region around 125.50, that was the 25th of January, and the 24th, Steven Mnuchin here, the US finance minister, mentioned something which was surprising. He said that a weak US dollar is good for the US economy. And he said this in Davos. And it it was a no-go, let's say, because what Draghi mentioned then on the 25th was that in Washington last year, politicians, central bankers, they agreed on not to actively intervene, even though also, and not with their rhetoric then, in the currency markets. And this is exactly what München did here. And you probably remember this this day. That was also the 25th of January. We had here a webinar on FX Street 2. And I was really irritated because the way Draghi communicated was just not the way you expect a neutral, objective person as a central banker, and especially a president of the central bank, in this case of the European Central Bank. You just do not expect him to talk the way he did. And so if you combine this, well, the thing is that today, and based on these developments here, back in January, there was no real chance for Draghi to intervene here and try to down-talk the euro, if there is a plan to do so. But all in all, I think we all agree that a too strong euro is obviously not positive for the eurozone. And this is something, again, if you look at energy prices rising and inflation not significantly picking up, well, this does definitely mean that there's something else going wrong, and the strong euro has probably, or is probably, the main reason why inflation can't pick up here, serious momentum. And now the thing is that here, I mean, Draghi probably had a plan in mind to down-talk the euro, even though he failed. Now the euro stabilizes at a quite elevated level, and now today's meeting is probably seen as a chance from the ECB / Mario Draghi to down-talk the euro to some extent, and then say, well, it's because of inflation. He didn't really do this. Nevertheless, the market, obviously, based on those comments he did so far on protectionism, is interpreting it as, well, there are obviously some thoughts around protectionism and counteractions. Not just politicians could, in the eurozone and in Brussels, could put on, like also tariffs on whatever, but also that the ECB could use their monetary policy, respectively their tools they have available, to probably down-talk the euro here. And that's somehow what I see right now the market is doing, and why the euro is giving back those gains, and why the DAX now can take off. And by the way, this is completely the opposite from what you consider to be bearish. And I have to be honest, I don't see the market capped here, but I see some further potential on the upside, which could easily, again, push us into the weekly close up to 12,600 points. And why I currently enjoy to be long. Let's nevertheless see how things develop, because on the other hand, we definitely have to wait until the US equity markets open here and how they respond, and if they respond bullish. If not, well, this could then at least hold the DAX back a little here. But again, let's just see. Opening will be in 10 minutes, and I'll give you, again, what I already mentioned at the beginning. I'll give you an idea of how to trade this opening, and how such a strategy could look like, respectively, what strategy is then here included in this basket of strategies we're running here, and the account which I'm managing actively. So so that's it on the ECB then. Yeah, let's first of all have a look here at the questions. Yes, this is something I will now go through. So first question here: may I know the relationship of NFPs and with that of DAX here, respectively? What's the likely impact of NFPs on the Euro USD? Yes, this is exactly what we want to have a look at right now. Nevertheless, I first of all wanted to use the chance to show why I think NFPs tomorrow are probably not such, do not have such a huge impact on the markets, but why I expect the ECB to have a bigger impact here. Nevertheless, it's definitely necessary to look at tomorrow's event here. So first of all, this is Bloomberg, and at Bloomberg, on the website bloomberg.com, you get all information around the NFPs, especially in terms of the consensus currently, which is here at 205,000, and especially consensus range, which is very, very helpful to get an idea of when do we get to see a surprise. So what do I mean by that? Well, one second. Let me just one second here. Let me just, I mean, we do it in a very rough way, but I just want to give you an idea why this consensus range is so important. So let's do it that way. So usually, or probably, you have heard, I bet you have heard here about something we call normal distribution, which can be, yeah, can be seen as something like that, right? And so what you usually have here in this region, this is the highest point, and this is what market participants usually expect the NFPs, how they expect the NFPs to come out. So what you can do is, for example, you can have those rectangles here, and then have something like that and build it around that. And all in all, based on that, you will get such a distribution. And now imagine those rectangles to be the expectation from analysts, in this case, asked from Bloomberg here on what is their expectation on the non-farm payrolls tomorrow. So now, interesting thing is that if you look at this chart here, you can see that the consensus range means that currently the market is seeing, I'm sorry, that was the wrong one here. The market is currently seeing 152,000 here. It's the downside of this range, and 230,000 on the upside. One second. Let's put it here. So 230,000 is here. And everything within is usually something where you shouldn't really expect the market to move much, because what you usually see is that within this, obviously, it's not a big surprise to see those numbers here. By the way, let me just put here 200 and I think it's 202,000, right? 202, 205, 205,000 here. So this is the highest point, and usually the number which is the most likely to be expected here from the NFPs. So everything which now comes in above expectation, which is around 205,000, but is slightly or close to 230,000, isn't such a big positive surprise. Everything above 230,000 is a surprise on the upside and positive for, usually should be positive for the US equity markets, respectively also positive for the US dollar. And why is it positive for the equity markets? Something we will have a deeper look in a few seconds here. Same is true for the downside. So everything below 200,000 here should be usually considered a data set which is disappointing, and everything which is nevertheless above 150,000 is still okay. So it shouldn't really move the market that much. Everything below 150,000 probably is something which could cause trouble here. Now the thing is, the data set itself is probably interesting for the first few seconds, but over the last, not just months, but years, I have to say, it's something which more and more played a very, very interesting role here, and a very important role. It's the average hourly earnings, because they are the most likely factor in terms of economic growth. The more, let's put it very, very roughly here, even though I just hope that there are no economists out there, because they will just switch off the stream here at this point now, listening to this, what I have to say. But the thing is, the more money you have in your pocket, well, the more you potentially, the more you will consume somehow, right? So, and if average hourly earnings are rising, obviously you have a better chance to have more money in the pocket, and then just try to consume more, which means that probably economic growth is more likely to be positive, and the more positive economic momentum will be taken on. So that's a very rough way to explain this. Nevertheless, this is a number which could easily completely erase any positive impacts here, for example, the non-farm payrolls have. If you, for example, see a reading which is something between 200 and 230,000, 205 and 230,000, while you see a huge drop in average hourly earnings, numbers coming in significantly below expectation, which is currently here month on month at 0.2, respectively year on year 2.9, and those numbers come in with 0 here, or here 2.5 or something like that, well, you can have new jobs created, like, I don't know, 250,000, but the results shouldn't be that positive for in this case, the US dollar, since you usually expect the Fed to hike rates faster. So that said, now the overall expectation is quite positive. That has also to do with the fact that here, for example, yesterday's ADP data set came in above expectation. So numbers, again, for the ADP here came in with 235,000, which were expected at 190,000. By the way, sorry, is correct? No, here to 195,000. So here the numbers came in quite strong and were also revised higher for the month before. So for January. And so since you can see here in blue, this is the ADP data set, and in those dotted or the black dots here, they are showing the NFPs. If you create such an overlay, you can see that usually the ADP data set is usually a very good indication of what to expect from the NFPs here. So and since here ADP came in above expectation, you usually would expect also the NFPs to come in better than expected. So now the question was what to expect for the equity markets. So I had a quite positive, by the way, here's the opening in the US equity markets. One sec, let me just here, get this done. And now let's have a look back here at the DAX. So what you usually expect, that's by the way, very, very strong. The DAX stabilizes at a high, an elevated level, current daily highs. You can see here that the S&P, I'm not saying it has trouble, but nevertheless, it's not really taking off. That the DAX can stabilize here, even though the S&P is not shooting up right now, I think it's positive. It's a sign of strength, I think. Nevertheless, what I expect for equity markets, if NFPs come in above expectation, I expect a bullish reaction. Why do I expect a bullish reaction? Because now some might say, wait a second, you just said that if numbers come in above expectation, that should usually mean positive economic growth. And positive economic growth usually is something central banks use to hike rates. And hiking rates is, if you look at the history, well, I haven't prepared a chart yet, but nevertheless, what I can tell you is that usually you see a positive correlation here with yields and equity markets, because usually rising yields mean nothing more than a positive economic outlook for the future here. And this is usually something which is positive for equities, right? And that's one of the reasons why to a certain level, you expect equities to rise hand in hand with yields here. But the current market environment is completely different from that, because what we've seen since the financial, oh, that's not so cool. 1 second. Let me just see. Usually you have an update on this website. I'm not really sure why. Let me just see what happens here. Margin debt. Okay, for whatever reason. So they have taken off the chart here. Now let me just have a look here. That's perfect. So usually that's the way this chart looks. And in fact, it's from November 2017. It rose even higher over the last months here. But what you can also see here, even though this chart is 6 months, you can see that the current margin debt here in the US is at its highest levels ever measured. And this is one of the reasons why equity markets can shoot and continue pushing higher, because the cheap liquidity provided from central banks here is something which is used here from speculators, but also from companies themselves in terms of buyback programs to buy equities, and this is pushing equity prices higher. Make long things short and not overcomplicate things here. And another thing is that you might say, hey, if this is a leveraged, well, doesn't that mean that if yields rise, that this usually will result in equities coming lower, similar to what we've seen 2008 once the financial crisis broke out? Yes, that's true. Nevertheless, again, if you have positive data coming out, this should usually go to a certain point hand in hand with rising equity prices, especially since, and this is also something I haven't prepared, especially since if you look at Bloomberg here, at the developments in 10-year yields, you can see that yields started to rise from the beginning of the year already, and probably caused also the flash crash. 1 second here, account settings. Shouldn't connected accounts, yes. So shouldn't this be possible here? Search 10. So what we've seen already is that yields rose quite sharply over the last 1.5 months, up to close to 3%, and in fact we're higher levels than we've seen here after the election of Donald Trump, with all those fiscal stimulus, speculation, tax cuts, and all this, which pushed, in this case here, not just yields higher, but also equities higher. You see the outlook of fiscal stimulus as something which is not pushing yields higher, because you usually expect the Fed to hike rates faster to not risk an overshoot in inflation. But what you also tend to do is you expect a positive economic growth. And the outlook here from the election of Trump, that was in November 2016, the market, in this case the Dow Jones, took off. Like, it was a parabolic move, if you want. And now the thing is that, again, rising yields are not necessarily something bad. The problem, you get a problem the moment yields start to rise, but it's more kind of, in this case, repatriation, let's call it here, normalization, and the market participants dumping their bond positions, because fearing that there is trouble ahead, let's say. And the thing is that here, with this domino effect we got to see at the beginning of February, there was also fears rising that probably there's not such a positive economic outlook in the future anymore. There are tensions building from a political perspective. China mentioning that they're probably not willing to buy US bonds anymore. And all this, this tension is building. And now with the speculation around the tariffs, which could hurt overall trade relationships between let's say, G10, G7 probably countries. In this case, we're especially talking about the US and China. This is something which means that the economic outlook is not that positive anymore, let's say. Probably not just only reducing, but there's potentially a recession at the horizon, while yields are rising. And this is something in the currently aggressively leveraged market environment. This is something which then usually results in equity prices to drop. That means if now NFPs, and now we come back to this, let's call it a micro event tomorrow, if NFPs come in above the expectation and somehow give at least a short-term positive outlook for the US economy, this is something in a market environment with rising yields, which should be positive, taken positive from equity markets, and in this case then result in a result here in this context in a rise in equities. The same is true, by the way, for the Euro USD in this case, even though I only see potential of a short-term reaction. So currently we can see, and this is, by the way, also something I expected already for the Euro here. I was very, very careful, and something I mentioned already in several morning meetings over the last days. I said, after the break of 23.50, very short-term, we have potential up to 124, even though right before the ECB, and this reaction now proves me right, I would be really careful, because I think that there will be some attempt to down talk the euro. That didn't really happen here. Nevertheless, the euro is interpreting the words from Mario Draghi quite dovish. And with this said, I could imagine now the euro probably keep on dropping, and here with tomorrow's NFPs coming in above expectation, if they really come in above expectation, US dollar could probably make back some of the losses he has seen over the last months, over the last year, we have to say. Even though I still remain bearish and I only see limited upside potential, probably up to this region here of 91, if at all. So currently we're trading below 90, and this is really optimistic here that we get to see such a push on the upside. But all in all, I'd say that chances are good that Euro USD, if NFPs come in above expectation and also average hourly earnings are coming in above expectation, this is usually something which should then accelerate a potential drop in the Euro USD on the downside, which, by the way, also potentially pushes the DAX higher, since especially in Germany, we are very, very export oriented, which means that a weak euro usually is something which should more or less lift up the DAX, even though this correlation is not that strong currently. Nevertheless, it's something which could give some further, could act as kind of a further catalyst here for a push higher. And again, I consider this to be quite nice right now. And again, here we have, this is the first target, 13,400 points on the 12,000. I'm sorry, 12,400 points, and above that, there's probably room up to 12,600 points if this momentum continues here. Yeah, I just hope that I answered the question. 1 second now. Okay, yeah, that looks good. Are there any other questions, further questions at your end? What I will do now is, by the way, what's happening here? Okay, this is my mail account. Okay, I just have a notification here that Microsoft Outlook is restarted. I was just wondering why, but yeah, it has no impact here on the webinar. So let's have a look now at the S&P here, and how to potentially trade it, respectively. One of the strategies, again, one of the strategies we are also running in this strategy basket here. By the way, if you update this website, it's not updating itself, then you can also see here that the open profit loss, for example, I'm not sure, but surely it should be available in English, that this then changes here. Yeah, let's have a look at one of these strategies here traded within this basket. So 1 second, please. Let me just. Okay. I have to open another slide, which I usually show here. It's around the English US market opening. And so here, this is the setup, in fact, the definition of this open range setup. It's a classic breakout strategy. We define an open range between 2:30 and 3:15 p.m. GMT. So right now, look at your clock. You will see that we obviously have to wait another 30 minutes here until we have such an open range ready. And if we then have it, what we just do is that we trade in direction of a predefined advantage. In our case, it's the 50-minute exponential moving average. So, or make long thing short, we trade above that, we go long. We trade below that, we trade short, if the breakout occurs on the upside, respectively, if it occurs on the downside. And then what we do is that we trade the break of the open range in direction of the identified advantage, as already said, with a stop above, respectively, below the high low of the range. Let me just give you an example here. of so let me just where's the chart here? Let me just give you an example from yesterday, how this looks like then. In fact, yesterday was a very close one. So we didn't get stopped out here. So the low of this range, again, you look at the first, in this case, 3 candles here, and you look at this 50-minute chart. So the low is 2,700 in this case. Let me just add a line here. So in fact, it's nearly the green line. So let me just do it that way. And as you can see, it was really, really close that we didn't get stopped out. Let's put it that way. And then the market really reversed and traded higher into the evening. So the stop was here, respectively. This is the low of the range, and then you can duplicate this, and you can see that obviously here, this is the highest point, which is 2,715.6. So what you do is you trade the break in direction of this range long, and you place the stop here. So we are trading above this yellow line, which is the exponential moving average 10 on a 50-minute time frame. You're trading it long here with the breakout, since we're trading above that, and then you place your stop here below the low of this range you defined, and the trade then is closed at 8:50 p.m. GMT automatically, so that you just take out the position there. And yesterday it obviously worked out. So initially the move started here, and we gained some momentum, then reversed, got nearly stopped out here. The market reversed again and traded higher, and we took out the position somewhere here, which resulted, in fact, for this day then in a profit of something like 10 points or so. And this is the same what we will do for today. So what we'll now do is we wait till 3:15 p.m. GMT, and then take it doesn't work, okay, and then take the high and the low of this range. Currently the high sitting here at around something like 2,736.3. And if we trade above this yellow line and break out of this range, then on the upside, we're going along with a stop below the low of this predefined range between 2:30 and 3:15 p.m. GMT. And that's in fact it. And now you might say, well, this is a very, very easy and rough setup. Does it really work? And yes, it does. In fact, it does. I can show you some stats here for a time span from over 7 years of back testing the strategy. 1 second. I'll give it to you here. That's a chart. I took a screenshot I took in a webinar I held together with Stefan Friedrichowski. He's a guy, he has a PhD. He's a PhD in physics. And we held together also here, that was last year in July, August, something like that, a webinar on FX Street, and he had some internet connection problems. And so I took a screenshot just to be prepared in case his connection gets lost. And in fact, I took the screenshot and his connection got lost again. He reconnected afterwards. Nevertheless, I was capable of taking over them and present the strategy. Yeah, and this is the result of this strategy. So you can see that here from November 2010 onwards, the strategy worked out really well, and you can see a clear uptrend here in this equity curve. The hit rate of this setup is 47%. The payoff ratio is 1.31 to 1. That means that you divide the average profit through the average loss. You get the so-called payoff ratio. You divide 1.08 to through 0.82, and then you get 1.3 to 1. And if you multiply this with the win rate, the hit rate here of 47%, you get a positive expected value, which is also something which can already be seen here. There are times in which such breakout strategies work perfectly well and really nice, especially in terms of higher volatility, while there are also times within periods of low volatility when they're not working really well. The interesting thing about this is that you can also add some filters to it, like a volatility filter saying, hey, I need at least 0.2% of the current index reading here, in this case of the S&P, to have it as an open range. And everything below that, I just don't trade because it's indicating that volatility is very low. That means in our case, for example, that here in the S&P, what you need at the current reading at 2,730, you need an open range, which is at least 5.5 points. If it's below that, we are not having a trading setup. And this, by the way, happened several times over the last year. Yeah, in fact, yes, it did. And so over summer, there were several times when we are running here such a stream on a Thursday, live trading of the US market opening, and there wasn't a trading setup at all, only because the volatility was so low that no setup was triggered then. And that's just one idea how to trade the S&P, but it's easily duplicable and it's a profitable trading approach. So it's generating a positive expected value, and all in all, that's one idea on how to trade the U.S. market opening. Let's now move back to the DAX again, stabilizing above 12,300 points. Very positive. Probably we'll get to see a pullback again. Some of you might have said, well, no, I don't want to trade the direct break. But the thing is, if the market now reverses, a former strong resistance here is now becoming a support again, which means everything against 270, 280, if it happens, we'll have to wait for this, sure. But the thing is that if we push back to this level, to this region, this could be considered an interesting long trigger here. If we trade back against this level, and it could probably be another trigger then from which we start to take off and then start into a quite green close of the week. Okay. Yeah, sure. I'm not sure. But did you listen right from the start of the webinar? Question is, the DAX is up now. The euro is steeply down. Any particular reason? Well, we had the ECB decision, the rate decision today. So that's the most likely reason here. Even though it's difficult to say what exactly the market heard here from Mario Draghi, even though his comments on protectionism are most likely to trigger some further quantitative action from the ECB, probably, even though they plan to not necessarily extend their QE beyond September 2013, or let's say reduce it from September onwards instead of holding it steady at 30 billion. So that's the potential reason. Market is hearing something dovish here, which is positive for the DAX, and which is negative then for the euro, steeply down again. Yeah, losing most of these gains here, and now, I mean, all in all, we have to say it's not such a huge market reaction, right? So, I mean, we're talking about a range of something like a little less than 100 pips. This is, I've been around the markets for quite a while, and I've seen ECB meetings when we have really seen huge volatility. So this is not such a big deal so far. Nevertheless, from a technical perspective, it's interesting to see what will happen now against 2350 here. If we break below that level, there's at least further room down towards 122.80, 123. That could be a deep red day then for the euro. And again, this could trigger further bullish action in the DAX, pushing us significantly, at least towards 12,400 points here. So in fact, that's it mostly from my end. If you have any further questions, just let me know. Probably on other markets you want to have an update on, something you want to watch. So we have still something like 5 minutes left. So probably the right time to ask such questions, if you have them. That's okay. So let's see here. Okay. No question. I take this as a positive feedback. So then I've done somehow a good job, I'd say, because I covered nearly everything, because no questions are left, which is really great. Yeah, so then I'd say thanks a lot for your attention. If you have any questions on whatever, may it be on this trading setup, for example, may it be on the managed account I just gave some insights on, may it be on the markets in general, please feel free to shoot me an email here at j.klatt@jfdbrokers.com. Also, if you want, you can subscribe to the JFD YouTube channel. So in the morning, every morning at 10:30 a.m. GMT, I give it's completely for free, a morning meeting. Something like 15 to 20 minutes, what to expect for the day, what are the most likely market moving events and all this. So just, yeah, look at Google, or not just Google, but YouTube for the JFD Brokers YouTube channel, and subscribe there to get a notification every time we're online. It's, by the way, not only me providing content there, but it's also my colleagues, especially Darius here, giving daily, we've called this our JFD espresso in the morning. And then we have also the JFD tea time in the afternoon here. So here to get an overview, who is Darius, who is Pambos in this case. These are the guys running together with me here, the research website from JFD Brokers. You can gain access to this by going to jfdbrokers.com and then just clicking on research, as you have seen here. You can easily also here filter which languages you prefer, even though I think it's most of the time it will be English. And so yeah, that's me, by the way. And this is Darius, and this is Pambos. So yeah, feel free to have a look here at the website. By the way, we have also an events page where you can find input on all webinars taking place. And yeah, in fact, that's from my end. Now one question coming in. Suggest you do the previous days open at the beginning of the webinar to show the trade. I'm not sure if I understand you right, to be honest. Suggest you to do the previous days open at the beginning of the webinar to show the trade. I'm not sure. Which trade are we talking about here? I could, in fact, easily show you all the trades. By the way, you can also see them here on the FX Blue, by the way. So if you, let me just have a look here. Oh, we can also click on orders, but open, close here, for example. Oh, no, that's not all trades open here, to be honest. Let me just see. I'm not sure, but sure, I could easily open the MetaTrader. The reason I have it closed right now is, in fact, very simple. That's mainly due to the fact that it's taking tons of resources here. And sometimes I have some difficulties then to stream here without any problems. So you mean that the method we based on which we then trade the market, and you mean to show it next time we have the webinar here? So how the if the trade worked out or if it didn't, you mean? I mean, we could surely do this. It's no big deal. But the question is if it's really such of such high value to have a trade from 1 week ago. Probably it makes more sense to do it the way I just did it. I'm looking at how it played out here yesterday, for example. Probably that makes more sense. So in fact, something now. Well, yesterday it played out. I in fact have to say that currently the strategy is working really well. I don't really know. Probably here. No, that day, for example, I think that was when we got stopped out. So there we got stopped in long, and then the market turned around. That was last week on Thursday. Yes, in fact. So here, for example, the trade didn't play out. That was last week on Thursday. But probably, yeah, again, if you want, we can easily do that. That's no problem. But probably you prefer to see the trade of the day before, because also the price action is somehow available, let's say. So it's still in our mind. Oh, by the way, what's also something I could do, just to show the result. If you want, I could easily work out something for the next time then in an Excel sheet to show the overall result of this approach I'm presenting here. So I mean, that's probably also something that's very interesting for people. Then that's something I could easily do. Yes, sure. I think we started in July or something like that, so I can work this out. Yes, that's no problem. If you want and interested in that, it's sure something we can do. Then it's not only, by the way, the times within which we had this event here, but it was all the times then, because such a setup is happening every day if you want, in case of volatility being high. Yeah, and if you want this, sure, I can easily work this out. This is no problem. Okay. So that's it from my end then. Then I wish you all the best. Happy trading. Watch your stops, and talk to you again next week here on FX Street on the webinar. Thanks a lot for your attention. And if you have any questions, again, please shoot me an email. I'd really happy to answer your questions. Have a good day. Happy trading. Take care. See you, and bye-bye.